And welcome out to the Trading Justice podcast interview series, where we've got a very interesting guest, a man that I just recently met here today. We've been talking here in pre-production about what the interview is going to go like. I'm excited. We're going to get right down to it. Chris Blasi is the president of Neptune Global. He's an expert in the metals markets, in investment, generally in finance in general. I saw that you worked at Merrill Lynch in the 1990s. You've been in this business for 20, 30 years now, Chris. Welcome to our podcast.
Well, thanks, Tim. It's great to be on.
Yeah, and there's many things I want to talk about here today, but really the crux of it is the metals and the cryptocurrency market. We're going to start with the metals market. When I think of the current modern monetary theory, you got a Federal Reserve who's lowering interest rates. You've got international weakness. You've got international federal systems where they've gone to zero interest, if not lower in some systems. What is your vision for where gold, silver, and metals are heading in the current monetary environment?
Sure. So we're gonna have to I'm gonna have to step back, and precious metals, and we'll talk gold, because the metals, all four, move on different drivers. Now there's a overall trend they may follow together, but we'll just talk gold because now we're talking about monetary policy and currencies and such. Gold entered, and this is something that we've stated, and I've stated for years now, a secular bull market in 2002. And that was going to play out over 25 years approximately, which is typical of a major secular bull market. And there's three legs, there's three parts to a secular bull. The first leg is up, and that really ran from 2002 to 2011. The second leg is a pullback and consolidation, multi-year, which is basically a 50% retracement in the gains made. And then there's the third leg, which is the most dynamic and offers the greatest returns. Now, 2002, 2011, leg one, 2011 till December of 2015, leg two, and we resumed and we entered the third leg, in my opinion, in January or December, January 2016. It is slowly picking up speed. And what we've been witnessing over the last month or so is that acceleration in gold. Now, one thing, people who are used to following equities markets, they look at gold in the same way they follow stocks, and it's not the same thing. Gold is a big picture item. And what gold is telling us, when we talk about reducing interest rates and the Fed policy and the ECB, these are symptoms of a system that's basically dysfunctional. And let's keep it in layman's terms, it's coming apart. Right? The saturation of debt, trying to stimulate economies with more and more debt that's just not getting traction. And what you're seeing in gold is exactly what happened in 2008. A couple years prior to 2008, at least I'll speak for here in the United States, everyone thought we were in a new economy, a housing economy, right? Everyone was just going to buy homes and refinance them, and they were giving out ninja mortgages, if people remember what that meant, no income, no verification. They're even up to, was over 100%.
Chris, I was a young man at the time. I got one of those mortgages.
Did you? Did you suffer the ill effects?
No, I mean, I could pay the payments, so I had a different situation, but I had an 80-20 loan. The 80% loan was standard mortgage. The 20 was subprime mortgage at like 11% and a variable rate. Looking back on it, 15 years ago, it was crazy, that I took that loan, but that was the market at the time, right?
Sure. And as you know, though, a lot of unqualified buyers came in. Mm-hmm. But, everyone was then sold on the idea. And I remember Chairman of the Federal Reserve, of course, the head of the National Association of Realtors, saying housing will never go down, right? It will maybe plateau, but never go down. But for those prior years, before that collapse in 2008, gold was aggressively going up. Now, with mortgages and housing and debt, and the CMOs, the CDOs, and everything else that was related to it, as great as that was sold, and as such an easy investment, why would anyone be going into something as quote unquote barbaric as gold? That's because big players knew it was not sustainable. So fast forward to today. It dovetails with the third leg. Gold is rising now because it's foreshadowing that there is serious financial problems globally. There's going to be another dislocation worse than 2008. And gold is basically your signal. It's telling you it's coming. Mm-hmm. a high level, it's not so much the nuances of the individual day-to-day policy. That's just the symptoms of a system that's flailing and trying to keep itself going.
Well, looking at the prices over the last 25 years, like you're talking about, the potential of a 25-year market's really interesting. From '02, when gold was at $300 an ounce, all the way until 2011, when it hit $1,800 an ounce plus. Then we had that correction back to 1,100, the 50% almost you're talking about. Now we're on the way back up. You know, when it broke out of 1,400 here this year, I thought personally, as a technician, that was significant. Now the fundamentals behind gold, obviously there's demand for it because people are looking for safety in this current trade war environment and everything that's going on economically. So as we're moving into this uptrend, I mean, for you then, based on your 25-year projection, there's a long bull run in front of us. I mean, we'd be looking at 2027. That's 7, 8, 9 years in front of us. Is that what you're expecting?
Well, just to clarify, secular bulls generally run 20 to 25 years. So it could be in that. And it depends on, you know, what that third leg ends in what they call the parabolic blow off, right? Mm-hmm. And I'll just back up. You know, you talked about technical analysis. That breakout at 1350, mm-hmm. which gold could not get through that for 6 years. Not only did it break through, but just to show the true pent-up demand, it just sliced right through, right past 1,400, stayed above 1,400 for a couple of days, and here we are at 1,500. I mean, if the financial media had another asset that was doing that, you know, that's all you'd hear. But of course, gold is not something that's something that they're anxious to promote and raise awareness with the masses. But it is really very heartening for anyone who is a gold investor, and people should not think that they've missed the bandwagon. Okay, you know, they just lost 100 some odd points, but I wouldn't recommend buying gold here unless I thought it would be substantially higher in several years down the road, which I believe it will be.
You know, that's interesting. You bring up the media. You know, when you do turn on the television, which I don't, I've been trading now 15 years and I rarely turn on CNBC during my trading day. But when you do, they're talking about stocks and stock picks and the bond market, interest rates and all that kind of stuff. Why do you think gold doesn't get the fanfare within traditional media? Why doesn't it get the exposure and the conversation at a minimum?
Sure. Gold is the antithesis. It's the enemy of the central bank system, right? Gold is real wealth, real asset. What's the other side? It's all debt. It's conjured up money. So it is out of favor and will always be out of favor from the central bank level all the way down. And of course, you know, Wall Street and the promoters and sellers of stocks and bonds, you know, their allegiance and they just follow the Fed, what the Fed says. They sit on their edges of the seat waiting every day for another, you know, another word uttered from the Fed, which when you think about it, what kind of economy have we become, right? I mean, when I came out of school in the 80s, you would pick up the Wall Street Journal and most of the articles were about businesses and different things they were doing to grow their markets and products. Now, all they talk about is Fed interest rates. I mean, it's really dysfunctional when you think.
Modern monetary theory obviously is kind of a dystopian type world that we live in where there is no real asset backing the currency and what they're doing. And by the way, it's not a political thing. It's right and left. Everybody seems to want to print money these days. But it's not just the media. I mean, it's the Warren Buffett types. Warren Buffett famously comes out and says, well, I don't really buy gold. It doesn't pay me a dividend. You've been around Wall Street investors for a long time. Why do some of those high net worth individuals and the Wall Street types who maybe don't have an agenda with the Federal Reserve, but maybe they just pass on gold? You know, what do you say to those types of people?
I think when you're at their level and the business that you're doing and your relationships with the major banks and the brokerage houses, because they all publicly traded issues, whether it's equity or fixed income, you're part of that. You're part of that world. Mm-hmm. And just anything else, you're either on board or you're not. And if you're on board and you're part of it, there's a message and there's a behavior that you are going to project and you are going to you broadcast. And that's it. It's as simple as that. They do not allow renegades to come in. And the other beautiful thing that's happening, of course, first time in history, negative interest rates, which we know, you know, there's a massive amount of debt internationally that is yielding negative. Now, as we move into that world, which a lot of people are projecting we're going, well, there goes that argument against gold doesn't pay a dividend, which you know, even that whole argument, gold doesn't pay a dividend. Well, how many stocks pay a dividend?
That's a good point.
It's such a fraud when a guy like Warren Buffett talks that the reason I wouldn't own an asset is it doesn't pay me a dividend. Well, through the years, there's very few dividend paying stocks. They've conned the public into saying, no, let the company keep the money to invest in itself and grow, right? Which really was more enrich the key executives, right? So here we have people holding stock, just all trying to have a momentum play. So, you know, it contradicts itself, themselves so often. It's really quite sad, honestly.
Well, my brother Matt always says Warren Buffett's not playing the same game everybody else is. You know, when
Absolutely.
he buys stock, he gets a discount. He gets all kinds of preferred rates. He even gets special dividends that other people could never touch, right? So,
of course, it's
not
called
the same game.
It's part of that team, and it's called talking your book. It's as old as, you know. So if you're out there with you know, all that debt and all that equity out there, you're there to talk your book and your world. That's it.
And I do want to keep talking gold, but I want to talk the other metals as well. Obviously, silver has made a huge comeback. I recently had a conversation with somebody who got pulled in 2011 into putting a big portion of his retirement into silver when it was blasting out and taken off. Held it the whole time, started coming back a little bit here. Silver at $18 has brought that gold-silver ratio back down a little bit. I do want to get to that, but let me just ask you about silver. Is silver a safe haven, first of all? I mean, like gold is. Do you think of it similarly?
Well, it's not similar. I mean, gold is a monetary metal. That's fairly well understood. You know, silver is that quote unquote quasi-monetary industrial metal, and you still have to look at the industrial side of it. You know, mine output, consumption by industry, and yes, silver's played a part monetarily, mostly in coinage and such. Just remember, central banks don't buy silver, though. Okay, so when you hear about the Russian central bank, the Chinese central bank, you know, Turkish, whatever, they buy gold. They're buying silver, and they haven't. So that needs to be kept in mind. Silver will benefit in gold's bull run. It is lagging gold. It will continue to lag gold. It's going to be more volatile than gold. It has and always will be. And an investor in that needs to be prepared for that. So even if you look at silver had a great run, greater than gold, right, over the last month or so, but now its pullback has been more dramatic than gold too. That's the nature of that metal. So if a person's in it, you have to buckle up and be prepared. You know, there is ways to diversify across the metals to kind of mitigate that. You know, we may talk about that.
Yeah, we'll get into it.
Yeah, silver will benefit, but its behavior is not going to change.
Let's talk about it right now, because you actually at Neptune Global, you created a patented thing called a PMC ounce. And one of the things that you did that for is so that you could diversify the exposure in the metals, right? And where you have a little bit of this and a little bit of that. Kind of explain what that is, because this is the first time I've heard about it. You know, I was looking at the preparation for our interview here today, and when we were talking, it grabs my attention as something very interesting. What is a PMC ounce, and what is the purpose of that?
Sure. So we created, a number of years ago, we said, look, we're 100% believers in physical metal ownership, not ETFs, nothing with a derivative, not a fund. But we said, look, we can modernize owning precious metals a little bit, right? Beyond just a bar and coin in my hand or in a vault. And we also know that there is, when done properly and not just to be slick, diversification within an asset class is always helpful. So we created the PMC ounce. And if you think about it this way, each PMC ounce is like a pizza with 4 slices: a gold slice, a silver slice, a platinum and palladium slice. And the PMC ounce is weighted. It's not the same weighting toward platinum and palladium that you would gold or silver. So there's a logic behind it. And that weighting allows a person to buy or sell in real time and have allocated and deallocated in their name at the depository level this portfolio of gold, silver, platinum, palladium that is designed and does deliver a superior risk-adjusted return. And that means a superior risk-adjusted return is basically we've mitigated a lot of the volatility that people experience when they're adjusting gold or silver or gold and silver. Now, you can go to our website, neptuneglobal.com. The chart is there. PMC ounce is not new. It came about in 2008. The patent was actually in 2013. And it's only patented because of the process we have where the customer buys and sells in real time, and there's a physical, fully allocated inventory at a non-bank depository. The depository is recording ownership at their level. We've cut out the counterparty risk in between, meaning we didn't securitize it, so that it's really a storage account. You're not buying a security, you have a storage account. But the main thing is the return, it actually doesn't not only produce a better risk-adjusted return, but by chance it also is far outperformed gold and silver. And that's all documented on our site.
Well, that's because palladium has had such a very, very good run now for years. And platinum, I know it was down in the dumps there for a while, but now it's making a comeback. When it broke above that 900 zone that has been in the last couple of years, I was very interested. We've gone short-term bullish on platinum. From a future perspective, platinum, palladium, those two, having those as the 4 slices in the pizza like you talk about, I find that fascinating. Why not copper? Why not other metals, that I've heard other metals guys talk about? Why those 2 metals?
Sure, a couple things. Because platinum and palladium are part of the precious metals universe, copper and the others are industrial metals only. They're more commodity metals. The thing that's amazing, at least from my perspective, is, as I said, it's weighted, and it's weighted where gold is still the primary precious metal and silver is a key metal. The physical weighting is way much more toward gold and silver. So it's not like we went out and really created something that put a lot of more, we'll call it niche metals. Physically, the PMC ounce is only 1.75% palladium and 1% platinum. But that small amount of palladium, because of palladium's tremendous run, again, helped offset those years when gold, silver, and platinum were going down. Now, some people say, all right, palladium looks like it's kind of leveling off a little. It's had a tremendous run, and it has. But now platinum is kind of stepping in and now being a contributor where before it wasn't. So this goes back to any sort of investment. You can't market time, right? Going in and out of a physical position, buying and selling, the frictional cost is too expensive. And we say, look, it's very difficult to market time, if not impossible. We've created something where you don't have to do it. It's already proven itself. So,
let me ask you a question about this as well, Chris, because I'm thinking about this metals component in relation to everything else that we need to invest in. If somebody like a family friend, comes to you and says, Chris, I don't want investment advice. I'm not going to hold you accountable to tell me what to do. I'll do it on my own. But what percentage of my portfolio should I put into metals?
Sure. So we don't give investment advice. We're not a wealth management firm. We're not advisors. We're precious metals dealers. Now, our opinion, like we are in a forum like this, again, it's just our opinion. But if someone says, how much in my portfolio should I allocate toward the precious metals, knowing that we are not advisors, my opinion is just this. It needs to be enough of a position so that when it's called upon to help you, to help balance other assets, that there's enough there that's going to materially help.
Yeah.
So if a person has a trace amount, a minuscule amount, and the rest of your portfolio, which is maybe in equities or fixed income or real estate or something that is going to be impaired in the next major dislocation, what's a trace amount of gold or silver, even the PMC ounce, going to do for you? It's a nice to have. So my point is, that's what that individual needs to do. And that's what really portfolio management is, right?
100%. So like if somebody has like a $500,000 home paid off, they got $300,000 in savings, they got $1 million stock portfolio, high net worth at the end of their life, they're approaching retirement, but they only got $2,000 in silver coins. I mean, there might not represent any kind of safety there or a hedge, right? And so that would be a conversation, I'm sure.
I would hardly consider that going to be particularly helpful.
I hear 10% all the time, by the way. That's a pretty standard answer you hear from the industry. Where does that number come from?
What that is? That's just a textbook way of just, from a more legal perspective, a compliance perspective, to say, look, this is a safe amount where I'm not encouraging you to go into a larger position. It's interesting, though. No one gets penalized for saying, hey, you're a young fellow, 32 years old, go 95% equities, right? Right.
That's what they tell you. You go in and you get your 401k packet. They put you 95% in the stock market, right?
Yep.
Yeah.
And that's part of what I think, right? We both would agree, kind of the the ridiculousness of the system, that if someone was to say 30% gold, right, that would be, oh, you should be subject to an investigation, right? That's
Right.
99% equities. Oh, there's, nothing wrong with that.
Well, the bottom line is, if you're out there listening, and our listeners, they're educated, investors who are active in the markets. They run their own self-directed accounts. They're not looking for investment advice. They're looking for knowledge, right? And
Exactly.
A lot of them are good people. There's no question about it. Guys, whether you end up putting in 10, 20, 30, 50, or whatever it is, you need to design a portfolio that fits your objectives, your worldview, your
timeline,
things like that. I do think that 10% is kind of lazy analysis, quite frankly. It just always
that's a CYA. That's a CYA number, right?
Yep. Metals, I will keep talking about them, but I got to get your take on Bitcoin as well, because when you were describing that parabolic runoff and then the retracement, I instantly thought about the cryptocurrency markets. I've been an investor since 2005. I remember hearing about Bitcoin in 10 and 11, didn't buy my first Bitcoin till 13, but I did get in earlier than a lot of people. And then I watched the whole bubble and crash like everybody else. I'm a huge believer in the future of cryptocurrency. And I think from a 20, 30, 50 year cycle, we're going to be looking back at this period. And it's a moment for me, but I might be wrong about that. I think there's also a lot of confusion around cryptocurrency. What's your approach to Bitcoin and crypto in general right now?
Sure. I subscribe that I think cryptocurrency, and it doesn't necessarily mean Bitcoin, right? A lot of first to markets, especially when something is technologically driven, become obsolete by better offerings. And I think there will be cryptocurrencies in the future. I'm not sure who the issuers are going to be.
Yeah.
I think that, as you said, you're an educated, you do your homework, your listeners are, they make their own conclusions, right? In a lot of respects, there's still a lot of open questions. And it's even an example of where there isn't a good knowledge base with a lot of people. There's this confusion of calling blockchain cryptocurrency or conflating the two, right? They're not. Blockchain is a technology on which a lot of the cryptocurrencies use in order to deliver what they're delivering. But those are two completely different things. So if a person hears positive things about blockchain, that doesn't necessarily mean that's good for cryptocurrency. Mm-hmm. So, a person, unless they're at that point where they understand these are completely different things, there's still a lot of homework they need to do.
Is it pretty common when people are interested in gold, they ask you about crypto as well? I mean, the two seem to go hand in hand lately.
That was much more the case a year or so ago. Mm-hmm. When Bitcoin had its big pullback, that a lot of that dialogue disappeared. Mm-hmm. A lot quieter, which may be a good sign, right? Maybe that means this is a good time to take a position. I don't know, and I'm not endorsing it, but I do think they have a position. They will be around in the future. There's still a lot of questions on a regulatory basis, right? We know that the IRS sent out letters recently to lots of people who were trading Bitcoin who may not have properly, declared it on their income tax. Mm-hmm. There's big institutional investors who are looking to get involved in cryptocurrencies, but they're still not sure what the government's position is on them from an SEC perspective or a tax perspective. So in all honesty, until a lot of that gets sorted out, that will be a little bit of a hindrance to a wider acceptance and use of the cryptocurrency. So there's still a lot of things in play that are working out. I agree. It's just going to take a number of years. I think, it was a lot of enthusiasm at first. Now there's a little bit of a step back, and we're sorting through things. And I think I'm sure it's going to work itself out, but I wouldn't know which cryptocurrencies will do real well in the future, even if any of them are existing now. They may not, and they may, I don't know.
Which is where like a basket of cryptos in an ETF form or something has been a popular idea, but they can't get it through regulation. Why do you think the government's pushing so hard against these firms who are trying to put something together for the public?
Sure. I think some of it is it's just as simple as they're usually behind the curve, right? The firms, the people that develop these sorts of products, very aggressive, productizing things. And then the regulators who kind of sign off on it are not moving at the same pace. So and I think they're learning it. There's who knows behind the scenes what interests are, either for it or against it and battling with each other. We just have to assume this is such a big, that market is so enormous potentially and it will be such a disruptor that there are a lot of interests who are stepping in and making their case and either trying to block it or promote it, which I don't believe, I know I'm not privy to, and I think a lot of us aren't privy to. So
yeah, you know, I looked at your bio, Chris, like most people do. I looked at your LinkedIn page and your history. You know, being from Wall Street in many regards, I mean, you were in those industries for a long time. What are the things they make the biggest mistakes on? What are the biggest fallacies about Wall Street and traditional investing, in your opinion?
sure. I mean, at the end of the day, we know that there's a big marketing machine behind Wall Street. And we know the plunge protection team and such. There is manipulation. The manipulation, in my opinion, skews to support stock prices and depress precious metals prices. And I think when several years ago, people used to say that about the metals and people would be labeled a conspiracy theorists. Now that you see actual indictments and prosecutions of precious metals traders at major firms for price interference, I guess we know who was correct. But so there's
I don't remember what firm it was, but even from like 2011, 12, and 13 during the big run up, they're now, and that's how slow the government is. It took them 5, 6 years, 7 years to get to the point where those are actually becoming public, but it was admitted, you know, price fixing and manipulation, right?
Sure, absolutely. And don't forget, and the people that used to say, hang on, folks, don't worry, the markets will overcome the manipulators and precious metals will rise. And a lot of people said they were, again, conspiracy theorists. There's no way there's manipulation. So, the reality is you see the trend of which people are usually proven right and which are proven wrong. But, Wall Street is a marketing machine. My one takeaway is there's also a little misbelief in the precious metals world that all investors in precious metals think differently than those that buy stocks. It's not necessarily so. There's a lot of momentum chasing. People will buy at the high and sell at the low. The metals are just coming into their own. We know that I talk to other dealers and the wholesalers and the bullion banks. There are people that bought precious metals only like 2 years ago, a year ago, who thought it was, there's going to be this huge price spike in a short period of time. And that didn't happen. So now that the prices went up a little, or just before they went up, they only waited 6 months, a year. Now they bailed out. And now the prices are moving, right? Classic buying high, selling low. But the point is, if you're going to go in the metals, you have to understand this is something for at least the intermediate for long term. I don't really believe buying physical precious metals, hoping for major short-term moves is appropriate.
And we're about to wrap up here. We got a couple more minutes. I got 2 more questions for you, and then we'll also pitch your website again and make sure people understand what that PMC ounce is. First of all, I've enjoyed the conversation quite a bit. I love talking investing in general, but metals, there's something about it that's just so unique to me because it really ties in economics, economic theory, the history of where metals have brought us up to this point, as well as where we're going in the future. What is the number one thing you think that could derail your projection? Okay. Gold bullish, metals bullish. What could make gold and metals come back down and actually have that thing fail?
Sure. So one thing I have to say, and I agree with you, what's fascinating, the metals are fascinating. And I'll tell you, once you're amongst a lot of them, like in a vault or something, there's a unique feeling. But when you think about it, there are no companies from the days of the Roman Empire, that are still around. There's no more bonds from the days of the Greek Empire that are around. The only thing that's been around in the world of the monetary world is gold. And that's what's amazing. It's been around since the beginning of recorded time. Now, what could derail it? I don't think it's a derailing. I think maybe you can stall its continued rise a little bit longer. And it all just comes down to this. The currencies of the world are all faith-based, right? Fiat. And as long as they can keep people believing that it's got a little more time, that's all that's holding it up. So that's why that's why every day all you see on financial TV is what's the Fed? It's all just talking, jawboning. It's nonstop. And that's the only thing keeping the whole thing up. And I don't think I don't see gold going down to, $1,100 again. I know there's a couple of people that see it going way lower in a deflationary environment, and I will disagree. Gold actually does very well in a deflationary environment on a purchasing power basis. Mm-hmm. I don't see it collapsing. Honestly, I just see possible forestalling, maybe dragging it out a little bit longer. But I think that secular bull market, even for the technicals, I know are just showing the path, but even with manipulation, even with all the jawboning, even with everything the central banks of the world is doing, if you look at that long-term chart, it is a ideal, picture perfect of a secular bull market.
Yeah. Yeah. And then one last one, we have a lot of beginners in different areas of the market. Some people who invest in stocks, ETFs, commodities in different ways, paper versions of the asset. What do you tell somebody who's never bought even a single silver coin, that they're interested, they're showing you engagement, that they want to do something. How does somebody get started into the market if they're brand new and they've never done it before?
Sure. So that's a great question. There's a certain amount of education, and I encourage them to speak with a bullion specialist or someone who is going to be helpful. An example, because the mainstream isn't a supporter really of the precious metals, you're never going to get good, workable, investable information coming out of your mainstream shop. Then, of course, there's a lot of firms that I consider bait and switch. People come to the understanding that they need bullion, and they call somebody and they switch them to semi-numismatic coins and numismatic coins and collector coins with stories about, Roosevelt calling in the gold, which is not precious metals investing, right? Rare coins are nice if you enjoy them, but if your purpose was to go into gold or silver because of what's going on in the world and monetary policy, that is not gold investing, right? So, don't get led down the wrong path. So you need to do some homework and watch, when you're talking to someone who is telling you that they can assist you as an expert or a guide, make sure that they're talking about real bullion products. Now that means bars, coins, or other certain types of investment accounts. But I think that's the most important thing, because many people, when they're brand new to this, get taken down a path that is not true bullion investing.
Well, and then I got to ask you one last one, because I'm geeking out over here on one thing. You mentioned how it felt to be around the physical gold in a vault.
Real wealth. Real wealth.
Like, have you been around like stacks of gold bars and you've actually gone into the vault and you've been there?
Sure. Yeah. As a dealer, we've been around since 2002 for 17 years, and we've had inventories and storage in multiple depositories to conduct our business. So we've been there. And, the first time you go in, right, everything that, having worked at a major broker dealer, traditional Wall Street, everything is just digital, right? Statement. Mm-hmm. There's nothing ever tangible there. And to actually go in and be amongst all this tangible, wealth, it's a unique feeling, and to hold it, and it's very substantial. And most people that I know have had that same experience, have all had the same takeaway.
Yeah, that's what I got to do. I have to. I want to smell it. I want to feel it. I want to know what the temperature is in the room. Does it get colder? I can just imagine it. This has always been a dream of mine to actually hit one of these vaults and whatnot. Chris, thanks for being on our podcast. It was an incredible interview. People can find you on your site. Give us one last drop on that, if you will.
Sure. It's neptuneglobal.com. And you can learn. We're a regular precious metals dealer and dealing all the services for delivery and storage, bars and coins. But we also are differentiated by the PMC ounce and the gold and silver vault accounts. And we obviously deal directly with the public, but actually we have other dealers who are making a market and buying and selling the PMC ounce, along with institutional clients.
By the way, if you're out there and listening to the podcast as well, just a reminder, we're reading Aftermath as our book of the month. And we're big Rickards fans here, Chris. We've read all of his works, and obviously we're just huge fans of the way that he writes and what he sees. So I appreciate you coming on and having a conversation about the current state of the metals markets and where we're heading. And guys, we'll be right back after this break from Trading Justice.